Hi everyone. As Andrew says, I was roped in last minute yesterday afternoon on ESG and sustainability. This topic I couldn't say no to because it's very close to WFW's heart. For all our clients, most of you have received last year our sustainability imperative thought leadership report, where we have done a huge undertaking, spoken globally to all the companies, most of the companies, shipping companies and shipping banks, operators, charters, etc., to have their thoughts on sustainability and ESG. We had some very interesting and key findings last year. Of course, we would anticipate and expect some of that has moved on. As citizen of the world, we've been talking about this all afternoon. We all know about the green principles, as well as the sustainability-linked loan principles and bond principles and Poseidon principles, which WFW were also part of drafting with the founding banks. And so with that in mind, and IMO and the Paris Agreement, etc., I think it's interesting to note that shipping is a little bit behind the other industries, and we would just perhaps focus on what shipping is doing and where we see it going. So really our first question, before we start, actually I'm going to introduce the panel, that's very important. So I'm just going to let each of them introduce themselves. So with much ado, I think perhaps I'll start with Martijn.
Thank you for having me. My name is Martijn Hoogerwerf. I work for ING Bank in the Sustainable Finance team, covering Asia Pacific. We have a sector approach, so shipping is one of those sectors that we cover from a sustainable finance perspective. We're not only a leader in shipping finance, we're also a leader in sustainable finance. Amongst others, we did the first sustainability-linked loan back in 2017. We did the first sustainability-linked loan here in Asia Pacific. In 2018. We like to claim that sustainability sits within our DNA. The reality, of course, is ING is a traditional wholesale bank, and our loan portfolio is to very carbon-intensive sectors, amongst others shipping, but also real estate, cement, steel, and so on and so forth. And we've made a commitment to align our loan portfolio with the Paris Climate Agreement. And more recently, we signed up to the Net Zero Banking Alliance, which means net zero by 2050. So within sustainable finance, we work towards transitioning our loan portfolio towards net zero, but also working with our clients and ensuring that our clients come along with us on this trajectory. Thank you.
Hi there. Hi there. My name is Quincy Chan. I work for National Australia Bank, one of the big four banks in Australia. So I'm part of the structured asset finance team, which cover maritime as well as aviation. NAB is relatively new to shipping. We really only had a very focused strategy on shipping around 7 years ago. And since then, we've built a sizable portfolio globally. Similar to ING, NAB last year signed up to the net zero target by 2050. I mean, this topic is very interesting because all I hear about internally is sustainability, reducing our carbon footprint. It is very topical, and it is something that's very close to NAB's heart at the moment.
Good afternoon, everyone. My name is Desmond Leow. I work for Clifford Capital. I'm from the Origination and Structuring team, covering offshore marine and shipping clients. Clifford Capital was established in 2012 with support from the Singapore government. We have a policy mandate to plug financing gaps and to support Singapore-based companies to pursue their overseas projects in infrastructure, offshore finance, offshore marine and shipping.
Hello, my name is Klaus Schmidberger. I'm with KfW IPEX-Bank, which is the commercial part of KfW Group, the promotional bank of the government of Germany. We also have a sector approach. I'm working for the shipping desk here in our Singapore rep office, covering shipping and offshore in Asia Pacific. As a government, with our government background, I think the sustainability and ESG has also been in our DNA since our beginning. We are in shipping for more than 40 years at the moment. We have a portfolio of 15 billion US dollars, which makes, I think, one of the top 3 shipping banks, which comes with a lot of responsibility, I would say, and we always try to promote this sustainable developments within the sector as we do it within our own bank.
Thank you. So the first question I wanted to pose, and perhaps for Martijn and Klaus, is, well, seeing that there are more ESG loans in the world, how the shipping sector compares in terms of ESG sustainable loans, and in Asia as well, and whether you see a difference and the trend and what you've seen.
Thank you. So the sustainable finance market is absolutely booming at the moment. So last year we had issued roughly 750 billion US dollars. This year, in the first half, we were just shy of 700 billion. So it's going to be another record year. Sustainable finance, the way banks sort of act in it, has been around for about 10 years. The first green bond, I think, was issued in 2008. Up to 5 years ago, it was predominantly green bonds in the market, and now we see rapid diversification in terms of products, so including sustainability-linked loans that I already mentioned earlier, sustainability-linked bonds that come to the market. And the way it relates to shipping, like it does for other carbon-intensive sectors, it's that sustainability-linked products are particularly well suited for carbon-intensive sectors. And what we've seen with shipping specifically, if you go back 18 months ago, I think we maybe sold 2 or 3 transactions, sustainable finance transactions in the shipping industry. And over the last 18 months, we've seen roughly 30, 35 transactions in this market. So which is great to see. So ship owners are very comfortable, or getting increasingly comfortable with entering into this market, say unlike the aviation industry, which is still not as comfortable to enter into the sustainable finance market. But shipping is certainly speeding up in this sector.
And plus the fact that this sustainability linked gives more borrowers opportunity to access that sort of funding, because the green principles were stricter, because the proceeds had to be utilized for green purposes, whereas this is more of a general profile of the borrowers, etc., isn't it?
Well, I can just agree with what Martijn said. I mean, it's we are partners, competitors in many sectors, also in shipping. So we have the same experience. We have in the last 2 years, the development picked up, the pace picked up immensely. Like last year, I think all of our customers somehow asked to introduce some sort of sustainable or green link to the financing. We have a lot of experience with green bonds as one of the largest issuer of bonds as the group, and now we're transferring this into the product side, and we are happy to support our clients that are actively asking now for these kind of products, sustainable loans, green loans. We just closed 2 loans with Hapag-Lloyd on a green loan basis, and completely agree with what you said and what Martijn just described. We are on this transition path, and we are supporting this development immensely.
And in terms of credit policies, how have they adapted to take into account ESG and the lending decisions, and how do you find the borrowers have reacted, and in particular in Asia? Maybe Desmond, you'd like to say something to that, and as well as Klaus and Martijn.
Yep. The decarbonization challenge is too big for a problem for any one company to solve. I believe that everyone has to play their part. Collaboration is essential to help the industry transition to a low carbon future. It is expected that the larger shipping companies with a larger carbon footprint, and also they have a lot more resources, they will have to invest in new technologies, to try to lead the way and not just to meet the minimum requirements that's required. So yeah, I think that's all. Thanks.
If I could add to that, I guess there's two sides. The sustainability side, as I look at it, is more incentive-based sort of offering for the customer to help them transition. But the other aspect of it is in terms of credit policy with the ESG risk. That actually is hard, and you could hear it today from all the other sort of previous panel. There are so much uncertainties, over the next 5 to 10 years in terms of technology propulsion, and we think about for financier, what we do is we provide long-term financing. That's the main bread and butter for a ship financier. So you're in it for a long term with your client. But during that period, the risk that you face of your collateral being obsolete, the vessel, the technology, I mean, that is one thing that is, it's actually sort of front and center of our mind, but at the same time, there's no right or wrong answer at the moment because it's just so subjective and so many unknown to deal with.
Klaus and Martijn, have you got anything to add to that?
Yeah, maybe as an anecdote, in our credit committees nowadays, regardless of whether it's a sustainable finance transaction or not, our credit committee will raise a question around sustainability typically. So this is not a hardcore set in specific credit policies, but it is a question that's being raised by the credit committee.
Yeah, same here. Like we don't have a set of KPIs or criteria. We check. It's not like ticking a box thing, but every analysis, every rating, every credit approval process includes somehow, okay, how are they dealing with the ESG and with the sustainability issues? What's their strategy, and does it fit into their overall corporate strategy? Is it future-proof the business model? Will it continue to be profitable and successful in the future? And will it be successful, and can they maintain? Because as you said, Quincy, we're financing long-term assets for long periods of time. So we try to make it sure as possible that this asset will earn the money to repay our loan.
Yeah, and in that vein, I suppose, do you consider adapting the principles to different operators and owners and new builds, second-hand ships, etc.? What's your view on that, and how have you dealt with that?
I mean, at the moment we don't have like this universal standard. I think this is one of the main questions of this panel, so I am not able to answer this at this point. But it's we are adapting our. Well, you mentioned new building and second-hand vessels. Of course, you have to look at it from different point of view. Both have their reasons and their beneficials. And I think everybody likes to finance new buildings because there you can really you can build from scratch. You have the newest technology. They're efficient. They're large. You have big volumes to finance. They're gonna keep value for a long period of time. On the other hand, you have I don't know how many ships out there, 40,000 vessels on the water every day emitting carbon and other emissions, where you could also, I think there's also a market to retrofit, to improve efficiency of these vessels, which will have an immediate impact on the carbon and on the emissions. So we are very open to look into retrofit financings and to improve efficiency here. Like we have a lot of experience when it comes to this kind of projects. We developed a structure which we applied already in 2014 to where we updated and retrofitted, refurbished 100 propellers for a big liner company. We transferred this into scrubber financings on a fleet package kind of a level where you don't have to touch the existing financing, so it's quite lean, it's quite straightforward, and we are very much looking forward to bring this forward to the future, to new technologies which will hopefully come up soon, to like, let's say, build wind sails or Flettner rotors on vessels. All kinds of technology which we might not even know about yet could be a potential project for us.
And other energy-saving technology, basically. Yeah. And what's interesting for lawyers, from a financing perspective, these technology and equipment will be attached to the ship, but actually not form part of the ship, so they're easily removed and it can be sold separately. The only thing that, as a financier, you have to bear in mind that when you take a mortgage over the ship, it will not include these equipment, and you'll have to take a chattel mortgage, and it's separate, but that's just by the by, and that's just something to note and bear in mind. But so long as you're open to it, these are all available for the borrowers in the industry, isn't it?
Yes, and then we managed to work around exactly these issues of mortgage and how can we finance equipment on a vessel that is pledged to someone else. And yeah, we found solutions that worked, and happy to share with and support our clients further.
Good.
Yeah, is it? I'm not having much luck with my mind. Thanks. I mean, to your point about some of these principles or standards, they are indeed quite widely defined at the moment. So if you look at the green loan principles that you referenced, or sustainability linked loan principles, you know, both developed by the Loan Market Association. ING was heavily involved with developing these principles as well, but they're fairly loosely defined. So for example, energy efficiency can be classified as green, but what does energy efficiency actually mean, right? So the market basically sets the standards at the moment, but what is happening, and you know, for example, we see the EU taxonomy in Europe, but also regionally here in Asia Pacific, we're seeing taxonomies being developed around what economic activity can be classified as green or sustainable versus non-sustainable. And that will also start driving better definitions of sustainability in the market.
Yeah, no, that's interesting that you talk about the EU taxonomy, because that's something that I was hoping to also get to, because that is trying to provide a uniform approach to allow companies and investors to objectively assess projects to see whether they're economically sustainable. And at the moment, as far as we're aware, Asia doesn't quite have that, but that would make it easier and better, given that part of the data collection to have accuracy will be expensive, it may not be efficient, it will be time consuming, so to have that available and that standardization, I think will help everybody. And so in terms of cost, it leads us to that also discussion of cost. Given that it's very expensive, do you think that only the large companies will be involved in that? And is that what you've seen in terms of the approach for lending? Is it mainly the large companies who are interested in these ESG facilities or sustainable facilities?
I think that's definitely a cost. But whether it's just the large owner or the small owner, I think it does depend on the mindset of the owner, on what they want to achieve, and whether the whole, whether sending that message that they're sustainable is an important part of their branding or not. Again, we see it, the sustainability linked loan is just one product that we, if a client needs, we're happy to offer it. It's all a very customer-centric thing. If they don't want it, then it's fine as well. But the times that we sort of suggested it and socialized with clients and they've said no, a lot of it stems from cost. It's the cost and also the manpower, which I guess is cost as well, to implement that, to monitor it and provide that information.
Yeah, and I agree with Quincy. So I believe all companies, large or small, they have the ability to implement ESG policies. I think what the regulators have done, for example, MAS, they have provided a green and sustainability linked loan grant scheme. This will help to defray some of the costs that companies have to incur to engage an independent party to assess the credentials of the green or SLL. And
yeah, what I want to maybe just add one note is that, my experience or our experience is that for conventional, traditional ship loans, of course, our rating tools, most of our rating tools on the banks, they're like big corporates, but I'd say it's more depending on the business model. If you have a profitable business model, I think you will find your source of capital. I think it has been said before. It's just ESG will add another aspect of cost, but if your market favors or size, then of course as a large corporate it's a benefit. But there are niche markets and small players we can finance that are not large corporates with just a small fleet, but they're so successful in their niche, in their market, so it's not necessarily a question of size. I think it's more a question of business model and profitability.
And maybe on the point of cost, the beauty of a sustainability-linked loan is that there is a potential discount to be had on the margin. So that may offset the additional cost that a ship owner would have to make.
With all that, and the added beauty is sustainability linked is more about your business strategy rather than an isolated loan and its purpose. One of the key findings that we found talking to all the global shipping markets, there was a little bit of a divide, and probably because of the cost, that 90% of the ship financiers were in favour of and wanted and had very prominently placed ESG sustainability as a primary concern and something that would feature in all their facilities. And on the other hand, for the owners and operators, we found that 2/3, so a third of them said quite unequivocally that they would not have sustainability and ESG impacting their investment decisions, and I think that's probably a cost issue. What was also interesting is half of the owners that we spoke to and interviewed said that in the next 10 years they will not be using non-hydrocarbon fuel. Also, half of the owners said that they will not be affixing some sort of fuel-efficient hardware on their ships in the next 5 years. So that was last year. So it'll be interesting if we redid that study this year to see whether we've moved on from there, because as we all aware that there are cost implications. Going on to Poseidon principles, I think I guess are you all aligned in your shipping portfolios in that practice? And sorry to be more pointed, I think maybe the question is, ING clearly is a signatory, but for the others, what is their general feeling about signing up to the Poseidon principles as well?
I know for now it is something we are seriously looking at and studying and considering. COVID put a hold on a lot of things, and unfortunately, our assessment of signing up got put on hold because of COVID, because of other things people have to worry about. So right now, it is something we're seriously considering, but part of that, and I know it was talked about before, part of that is understanding the commitment that the bank will be taking on in terms of costs and monitoring, and I guess once we have a full understanding of that, I'm pretty sure we'll sign up at that point.
For Clifford Capital, although we are not a signatory to Poseidon Principles, but our approach to assessing borrowers or financing is not at odds with the principles as required under Poseidon Principles.
First I can say, KfW IPEX was part of the development of the principles, in the drafting stage on the Global Maritime Forum initiative. We're part of that. As I said at the beginning, we are on a group level. We're developing this roadmap to sustainability, which is committed to the United Nations Sustainability Development Goals, and this global group roadmap has to be set in place first before we can sign on a sector level basis. So we very much appreciate the initiative. We are very supportive. I think it's a good movement, and because it provides transparency, it provides data which can then be built on, and so that's our position at the moment.
It's interesting you talk about transparency. I think what we've also found from our report was that ESG, there's a lot of focus on the E, less focus on the S and the G, and probably more need to go on focus on the S and the G and maybe it's something more for the owners and charters and operators to look at, maybe transparency, diversity, crew management, etc. So those are interesting things that haven't really appeared at the forefront. I don't know if, Martin, your experience is that, you know, there is a slight shift to address that or not at the moment.
So I think there's been a shift towards climate and environment taking a bigger role in the debate of sustainability. So that's sort of what's been happening more broadly around, you know, beyond shipping itself. But social, you know, certainly as a result of COVID, should not be underestimated or forgotten for that matter. Within shipping itself, specifically the E bit, the environment bit, is the predominant sustainability topic, of course. But the S and G should indeed not be forgotten. And you know, just as a reference, there will not be any sustainable linked loan conversation that I'll have with a client without sort of bringing up a social KPI, for example, on health and safety.
Again, I have to agree. And as shipping is a carbon-intensive industry, of course, the E is the dominant letter in the ESG. But we need to also focus on the S and G. Like, for example, we are promoting, or we're member of the Responsible Ship Recycling Standards Initiative. It's a group of banks that started it in I think a couple of years ago. There will be a presentation tomorrow. I can only recommend everybody to join that online. And yeah, and the sustainability linked loans already points towards this, that you need a KPI on the E, but also one for the S and the G. And COVID showed it quite clearly that how important the well-being and the people are that are actually on the vessels that we are financing.
Thank you. And then just the final question, which is really the overarching topic that this panel has been meant to be focusing on, is, I'm just reading it verbatim, which is, can shipping finance have a universal strategy, or will the diversity of shipping lead to inconsistent ESG finance interpretation? So I'll open it to whoever would like to answer that. It's quite a wide and varied question, so, you know, whichever slant you want to take on that, please do.
Well, I think just the fact that you had to read off the question shows that the answer might not be so easy. And I have to admit, I don't have an answer to this. I think it would be beneficial to have more like clearer standards. There are many standards out there at the moment. I think it's just good because it shows there's a lot of activities from different angles towards the issue. But for shipping, I think it would help to have a selection of, okay, what is material, what is affecting all of the shipping sectors, and then maybe have another layer of standards for each single sector, but make it more transparent, make it more comparable, make it more more efficient for stakeholders to decide, oh, this is sustainable, more or less sustainable than another project. This is where I want to put my money in. Yeah. For owners, for banks, for any stakeholder.
In terms of ESG financing toolkit, I think this would have to be more of a bespoke offering than a one-size-fits-all solution. So yeah, I think that's my thought on that. I think we at Clifford Capital, we are also trying to best assess how we can adopt ESG-focused strategies to support the decarbonization, and at the same time retain the ability to continue to support our clients to meet their current needs.
The way I look at it, ESG is for a bank, it's one of the gating issue, right? It's similar to your credit policy. It's a gating issue whether you will establish a relationship with that customer and you cut that out. So So I think everyone, again, so there's an easier interpretation credit policy. I think the underlying thesis is always don't be funny, right? Make sure your customer can repay you. I think there will be an underlying principle for ESG as well for the bank, but the interpretation and how they apply it, I think will always be different. It's a bank-specific policy that they will have.
Thank you. Well, thanks very much to my panel. It's been a pleasure hosting this. Before we get kicked off, are there any questions? Okay, we're not asking any questions. But if you have any questions, please feel free to approach any of us afterwards. Thank you.
Thank you.